So traders, right now, one thing I want to cover is the recession that's coming and what's going on here. But also, I want to cover this. This video is all about not only the coming recession, but some potential investment opportunities that you can start to look at, like today, to take advantage of when it comes to the actual stock market, the recession, comes to the rates as well too, to the yield curve. There's some things that I really want to cover with today to really help you out, to give you some guidance on what's going on here. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, before I do start guys, make sure you grab access to that free trading course. This trading course, guys, you'll be normally spending thousands of dollars. You guys normally spend at least a few $100s right now on courses out there that are very, very similar to this. But in fact, actually, you know what? No, I'm gonna scrap that. Most courses you buy out there, you may actually have 4 or 5 or 6 or all dozens and dozens of videos out there teach you all different things. But do you know there's only 20% of the stuff out there that really, the 80-20 rule, right? Right, 20% of everything, 20% of everything out there in the stock market is going to give you the 80% of the results. That's what I've actually put in this actual free trading course. And again, go very first thing in the description, guys. Click on that. And when you go over there, you'll be able to see everything you're going to get. And again, it's for free. And as soon as you put your email address in to get access to the membership area, you get instant access to the videos. It's not like you have to sign up, anything like that. It's like, no, you get instant access to that. Okay, so the very first thing in the description, go click on that and go get access to that. Now, one thing I want to talk about here is the actual yield curve and the recession. Let's actually start off with the coming recession and what's happening, okay? So we're not in recession now, and we're probably not going to get it now. And I'm going to talk about that. I'm going to talk about this yield curve here, right? And I want to talk about like the 10 and 2-year spread, and also the 10 and 1-year spread, because I've got something really interesting to share with you when it comes to that. And then also potentially investment opportunities that I'm really sourcing out right now, okay? And for you guys, for happy Thanksgiving, this is a bit of a Thanksgiving gift for you when it comes to potentially investment opportunities that are coming, that are underneath our feet right now, and people are just not seeing it. People are not talking about it. Anyway, so let's have a look at this here. So the first thing I want to talk about is the spreads between the 10 and 1 year, and obviously 10 and 2 year. Now, let's just look at the different patterns here. Okay, so if we zoom in, let's actually zoom out a bit more. So if we do the whole zoomy, right? And then one thing, as you notice here, right? So the 1990, all right, the 1990 crash, right? As you can see, we actually went negative. Right? Actually, you know what? Let's just keep it really simple. Class is in session. I'm teaching 5-year-olds. When the blue line gets below the red line, it says recession is coming, but it doesn't mean it's going to happen then. But when the blue line gets back above the blue line, the recession is almost here. When the blue line gets below the red line, that means that there's a recession coming. But then when the blue line gets back above the red line, it means the recession is almost here. When the blue line gets below the red line, the recession is coming, but we don't know when. But when the blue line starts to get back above the red line, the recession is coming. The recession is coming. We're here right now. So we're very, very, very negative there. Okay, so let's actually talk about this here. So we could see that we have a very negative here. So right now, the recession is coming, probably not right now, okay? We probably have a good another few months, maybe sometime next year we're going to get it. But firstly, what do we need? We need to see what? This sort of stuff happening first, okay? Start to get things starting to balance out a bit there. Now, here's where it gets really, really, really exciting, okay? So if we my voice just started going as soon as I started doing this video for you. There you go, hunky dory. Hunky dory. Happy Thanksgiving, guys. Hunky dory. Where the hell did that come from? Anyway, so same thing with the 10 and 2 year, right? Same thing, exactly what I talked about there. You can see how every single time we had below, and then now we're getting below, right? we are going to probably get snapback, and we're probably going to get a snapback through there. Okay, so that's what we're seeing right now when it comes to the markets. And then when I zoom into actually the actual yield curve, I want you to think about this for a minute. Okay, a lot of people are freaking out about what's going on right now and so on and so forth. I do believe when it comes to gold is starting to rally because that's what gold does. Gold rallies before the recession starts. Just look back in 2020, before 2008, right? And people were worrying like, why is gold rallying? Why is gold rallying? Now, put it this way. If indeed, no, not indeed, what tends to happen is this. This gives us a precursor to what? A recession coming, right? And then suddenly we get this, and then we know the recession is near. We get this. So every time this happens, even like back here, this is like 2007 or something like that. When that happens, we know the recession is coming. But hang on a minute. Didn't I also say that gold rallies before the recession? Interesting. So if I put one and one together, I was going to say 2 and 2 together. So that means if this indicator tells us the recession is coming and gold tends to rally before the recession, this actually could be an indicator to say gold could be getting ready for a rally, right? 2006, 2007. And again, if I bring up the good old gold chart through here, this is gold through here now, right? People wondering like, why is gold rallying? Why is gold rallying, right? If we go back to 2008, look at this here. This was 2008, and you can see it was 2007. Gold went for a rally first before the '08 crash, right? So yes, we did get the boom and crash. But as you can see, right, we end up getting a rally first in gold. So that's the very first thing I sort of want to cover with you there. It's like, okay, now we understand why gold is starting to rally a bit, because we do know gold rallies before recessions. And if this indicator is down here and it's telling us that a recession is coming, this could also be an indicator that gold is getting ready for a strong rally. Hence the reason why we've started seeing a nice movement to the upside on the gold market there, okay? Now, I want to take it one step further for you, okay? When we look at the interest rates, and this is obviously the stock market here, the stock market, all right? The stock market's here, okay? And then we have the 1 year rate, right? This is the 1 year rate. This is the black line is the 1 year rate, okay? And the green line, this green line here is the 10-year rate, okay? Now, bear with me for a minute, okay? So we have the 1 year rate, which is obviously what the Fed's doing. We have the 10-year, which is what the free market's doing, / what the Fed does when they print money, okay? But look at this thing through here. Notice this here, okay? Notice what we have here. Can I zoom in on this one? Let's see if I can I do that? Will it let me? There we go. Okay, cool. So notice this through here. Notice even before recessions, what happens? We start to get what? Notice the 10-year starts to peak and we drop down into the recession. 10-year drops down into the recession. 10-year drops down into the recession. The 10-year through here drops down into the recession. So as you can see, that what tends to happen is the 10-year starts to drop down. So what's that going to do to markets, to like TLT, maybe, TMF, maybe? Do you get what I'm trying to say here, right? Because we know it's the inverse, right? So if the rates are going down, we're going to start to see a movement in the upside in those sort of markets there. So there we go, guys. There's a few different things I want to share with you. Leave a comment below. Let me know when it comes to the gold market. Let me know where do you think gold is going? That'll be one. I think this is going to be the start of just, extraordinary quality move when it comes to gold. Secondly, what is your top favorite sort of gold and silver mining stock? I'd like to see what you guys would like to see, what sort of stocks you actually really like when it comes to your silver and gold markets out there. But that's what I wanted to share with you today, guys. There's two different main things here. One is that the indicator, the yield curve, the spread, tells us that a recession is coming. Therefore, it might give us a signal that a rally is coming in gold. Not no certainties, but a rally is coming in gold, because that's what gold does. It rallies before recessions. That's the first thing. Then the second thing is that we notice that the 10-year starts to drop before the recession starts, right? So not only does the 10-year, but also the 1 year, which is basically the Fed, you start to notice the 10 and the Fed start to drop together, right? So we have, you can see here, both the Fed, the 1 year, the Fed, and the 10-year both peak together and they go down. They both peak together here. They both peak together here. They both peak together here. So we still may have some more upside to come in the overall. We still probably have more upside to come in the interest rates because the Fed hasn't pivoted or paused yet. So we still may have some more upside to come in the 10-year rates. But there could be a really big, good buying opportunity when it comes to markets like TLT or TMF, for a good maybe 2 year type of view. Okay, so again, I'm not telling you what to do. There's no guarantees. The Fed could just jack this thing right up and do the surprise. Obviously, there's no guarantees there, guys. But just keep an eye out for that, and I'll speak to you in the next video.